Welcome to the Business Standard Banking Show. The Indian deal street is buzzing with activities. In the April-June quarter, India saw 82.3 billion M&A deals, the highest amount on record according to a Bloomberg data. This was the previous highest was 38.1 billion in July-September of 2019. To talk more about Indian deal space, we have today Manisha Girotra, CEO of Moelis India. Ms. Girotra, welcome to the show.
Thank you. Thank you for having me.
Thank you. Let us start with asking you how much of a challenge the global headwinds pose. I mean, we have interest rate hikes by the developed markets, and there are recession fears also. So how much of it is a challenge to the Indian M&A activities?
Thanks, Manojit. As you said, the global economy and consequently the markets are facing unprecedented chaos and disruption. A lot of this has been caused by the last 2-3 years of excessive liquidity being pumped into the large global markets, which then found its way into through the stock markets into companies, creating frothy valuations. It also led to a lot of people who were opting out of the workforce, basically getting used to subsidies. Coupled with that, the Russia-Ukraine war, the food and energy crisis, supply chain disruptions, China and the lockdowns that they had, all led to a perfect storm. All of this naturally led to basically investors panicking and money flowing back into the home markets, primarily the US, right, which you saw with the dollar strengthening. However, in the last couple of months, the market has started pricing in these risks, right? Whether it's the Russia-Ukraine war, I think the market's decided it's going to be a prolonged affair. Supply chain disruptions, everyone's trying to find alternate sources of manufacturing, including India on the semiconductor side, etc. We're trying to become more self-sufficient. So with all of that happening, I think the markets are discounting some of these risks and capital is finding its way back into a market like India. Today, if you see, India is the only large country which is showing 6 to 7% GDP growth. You and I agonize over whether it's 6 or it's 7 or it's 7.5. But look at it from where we are in a global economy where basically growth rates are 0 to 2% and even negative, right? We're talking about recession.
Yes.
So I think after the initial chaos, which happened in the last 6 to 8 months, we're actually coming out pretty strong, stable, robust, a country with a strong regulatory framework, stable government, strong consumer demand, favorable demographics. So my strong view is that the next 5 years, India will actually look very positive as a destination, so long as we don't do something which is unexpected to the markets, because of just the factors that we just outlined. And I think capital will flow in from Asia, from Middle East, from US into our country.
So before going into the details of the M&A activities, just wanted to have your views on the IPO market, the Indian IPO market, which has taken a U-turn since May, for worse. So what according to you has led to this downturn in the IPO market, and what will it take the markets to revive the IPO market?
Traditionally, over the last 60, 70 years, if you see, Indian companies do tend to go to the IPO market earlier than in most global economies, just because we didn't have such a strong debt ecosystem. The only debt we could get was from the banking sector, and beyond that, there wasn't a strong corporate bond market. So IPOs tended to be very early stage. Last 12, 18 months was a different phenomena. The liquidity was so excess, and investors were looking for newer destinations, newer stories, that basically whether it was in the private market or the public market, a lot of the companies that I believe were not even ready for the IPO market came into the market, and the valuations were completely unjustified. This was nothing unique to India. This was happening globally. I think with the capital getting pulled back, some of those IPOs some of those companies which were not ready for IPOs, and some more which were trying to come by just showing growth by burning investors' hard-earned money and just showing growth for the sake of growth, those models are over. And it's very good that it's over, because I think in the long term, otherwise investors would have lost money on these companies. So I'm really happy that the IPO market will now only be available for mature companies. Now, robust business models which can sustain difficult and challenging periods will come into the market. And that's very good for the retail investors, especially because they tend to get carried away with a lot of this frenzy and a lot of the buzz around stocks. And that's good, because I think people will not lose money. So this trajectory is much better than what we saw in the last 24 months.
Now, pharmacy has now called off its IPO. So do you think that startups will, in what you said just now, do you think the startups could face difficulties in tapping the capital markets, particularly after the poor show by Zomato and Paytm?
So look, I think what happened is, basically the excessive liquidity resulted in immature models coming into the markets. If we step back and say, the startup sector, the tech sector, am I positive on it in India? I'm hugely positive. I think it's a huge new ecosystem being created, 100 new unicorns, really robust business models in consumer, fintech. The young population, the use of smartphones is going to basically result in more and more of the younger population embracing technology, not just in India, but in Bharat, right? Bharat is embracing technology surprisingly even faster than you and I are embracing it, right? So I'm very robust on this sector. I think what had happened was that the valuations were running ahead of themselves. Some of the business models were not robust enough. What you will see now, Manojit, is instead of just investors finding exit in the public markets, you'll see some of these companies consolidate. You'll see the private market basically leading to a forced consolidation, merger, M&A, which we're already seeing happening. Large corporates like Reliance, Tata's bought Big Basket, Reliance bought Tata's bought 1mg, Reliance bought a lot of the companies in the consumer space. You'll see some of the large corporates putting their balance sheet to work to buy some of these startups which can't sustain themselves on a standalone basis. You'll see some of these startups come together, right? The business models basically are complementary in two cases. They'll come together, CCI, of course, permitting. So you'll see a lot of that activity happening rather than just a rush to the public markets where the valuations were just frothy. And that's why people were taking immature business models into the markets.
Last year, the corporate sector, last few years, the corporate sector has deleveraged themselves, cleaned up their balance sheet. The economy is also picking up and the deal street is gaining momentum. Which are the sectors that, according to you, could see more activities in the next 2 to 3 quarters?
So there are two parts to the activity. One, as you rightly said, is the private equity and the VC funding, right? Global funding, which is coming into the market. That basically plays on the India demographics, the Indian rising consumer class, etc. So that money finds its way into pharma, IT services, and BPO, where we've shown a natural edge, tech, and consumer sector. That will continue. Last year, about $80 billion of private equity and VC money came into the country and in the sectors that I outlined. So that continues to chase the same sectors. But I think what's happened, and you just said it, Manojit, that what's really positive is that India Inc. deleveraged and cleaned up its balance sheets. What was happening in the last few years that if I, as an investment banker, wanted to sell a company, there was no Indian company to go to. I had to naturally just go and knock at the doors of private equity. But today, India Inc. is showing that they are wanting to do larger deals, have higher capacity. Tata's bought Air India through an auction. Adani went and brought Wholesome back to Indian parentage in a large transaction, $10 billion. Today now this asset is owned by Adani. So Reliance bought the Shapoorji Renewables assets. So I think that's a big positive and that's very important for any economy, especially in a deglobalizing world like today, where there's so much resistance on, going to the cheapest source. People's home countries are fighting that, you shouldn't be outsourcing more and more. I think an environment like this is very important for every country to have a robust corporate sector in the country. And I think that's what's happened in the last 5 years with the forced deleveraging that happened, led a lot by the banks, the NCLT process. These balance sheets of the top 30, 40 corporates are robust and they're looking to do more M&A. So there will be consolidation. And I think that's good because, for any asset now, there will be a competitive process between M&A and corporates and private equity, which will lead to better outcomes for the seller too. So till last year, I think 60 to 65% of the M&A was PE led. I expect in the next 2 years, it will be more like 50-50 between corporates and private equity, Indian corporates.
But do you think IBC is a success story for banks as well? Because the haircuts are pretty steep. So, how do you see from a bank's point of view?
So I think this pain was inevitable. It had to be taken. And I think it was good that it got done quickly, right? Because if it had been done over an extended period of time, these bank stocks, balance sheet would have just languished. Today, you go to the banks, they are actually keen to do more business. They're talking about wanting to fund CapEx and saying, bring us more corporates who want to expand because their balance sheets are looking robust. The market is rewarding them. And you're seeing that in the multiples of these banks. So it was, I think it was a success. Of course, we can all argue, should have been faster, quicker. As Indians, we always are people in a hurry. But, look, these things are, any one lending had some 35 to 40 banks. So it tends to take time. But I think it was great that India cleaned up its balance sheet in a time that, anyway, the economy was slow. And now today, whether it's the banks or corporate India, they're all ready to do more and more. Who would have thought that an Indian company would have been able to raise $10 billion in 2 months and buy a global company, right? I don't think that was something that in my career, I would have seen that happen so easily for India. That is what we witnessed in the wholesale trade. So it's showing you that even though global banks are buying into the Indian corporates story in terms of the health of those balance sheets and of the banks, right? So I think it was a success, to answer your question.
Coming to the financial sector, now NBFCs faced difficult times in the last few years, the IL&FS crisis, banks choking funds to them. Now we also have the HDFC Bank, HDFC merger. And one of the reasons cited for the merger is that NBFCs the regulations of NBFCs are more aligned with banks. So it is no longer advantage to be an NBFC and run the business. Do you think more and more NBFCs would like to get merged with the banking entities, the commercial banks or the small finance banks?
So Manojit, I feel more positive on the NBFC sector than I did in the last 3 years. Because as you rightly said, because of the pandemic and the lockdown, basically, they had to give extended moratoriums, etc. They didn't have the right source of funding. IL&FS created a huge issue for all of these NBFCs. There was general distrust. I think a lot of that is behind us. The NBFCs in the whole pandemic, a lot of the good ones with good parentage have actually invested a lot in technology, etc. So they're able to compete now. They're with the banks also, the good quality one. So I feel more positive on this sector. Having said that, I continue to believe that this sector will see consolidation, whether it's within the sector itself, the larger balance sheets, the ones that have invested in tech and innovations, the ones which have good corporate parentage, will probably consolidate with the smaller ones who probably have some good consumers, some good niche products, but really can't sustain themselves against the banks who have also invested a lot in technology, network, etc. And of course, as you rightly said, banks will continue to consolidate with NBFCs. Valuations are looking more sensible. So yes, this sector will see a lot of activity, but I feel cautiously more optimistic on NBFCs than I did 12 to 18 months ago.
So there could be consolidation among NBFCs also. Is that a possibility you see?
Yes, absolutely. I see that happening. As I said before, the larger NBFCs who have good corporate parentage, who have invested in tech, innovation, have access to capital, will consolidate with the smaller ones who have some niche segments that they are, or niche geographies that they are strong in, or have some product, some technology which could be complementary to the large NBFCs. Efforts and initiatives. So I see consolidation within the sector. I see bank to NBFC consolidation. I see valuations now more realistic. I see private equity playing a large part because private equities invested a lot in NBFC. So as they think about their exits, they will think about consolidating with other strategic players. So I see a lot of activity in this sector in the next 3 to 5 years.
Yeah, I mean, recently we have seen a private equity player picking up a stake in Yes Bank, which is of course a private sector bank. But at the same time, there are stake sales of IDBI Bank, Shipping Corporation, Concord. Do you think they will attract enough interest from Indian corporate sector, or it will be overseas investors, the private equity, which will drive those stake sales?
No, I expect Indian corporates now to play this sector. In fact, I think these are companies which to turn around, etc., probably need larger gestation periods. And I strongly believe that Indian corporates, and so maybe in partnership with private equity, right? A lot of these private equity may feel they don't have the bandwidth to run these companies and they need an Indian strategic who's more familiar with the landscape to partner. So you may see actually consortiums led by by strategic, or strategic Indian strategic just bidding by themselves for these assets. I see, as I said before, I see Indian corporates today in the conversations I have with them, very, very positive on M&A. 20 years ago, it was always a discussion on, or an Indian corporate can always go and do a greenfield investment, and there was no need to go and pay 10 times, 12 times multiples for these companies. But that's not the case. I think today greenfield is seen as difficult, challenging, and the market is seen as something which is going to grow into a $5 trillion economy. So the Indian entrepreneur is saying, why don't I invest more capital into my country itself rather than go into global economies where the growth is weak and anemic, and pay those multiples, because the market will reward me for it. So I see corporate India bidding very aggressively for the assets that you mentioned.
On that note, it was a pleasure talking to you, Ms. Girotra. Thank you for speaking to us.
Thank you for having me, and pleasure meeting you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.